Hi, I'm Letty Chen, Tax and Super Advisor at the IPA. So, Payday Super starts on 1st of July for every employer. Super Guaranteed Charge will still apply to late payments of super, but it will take a different form under the new rules. Today I'll outline how this new SG charge will work. The SG charge will have 4 components. The first component is the total individual final SG shortfalls for the relevant payday. This is the amount of compulsory SG contributions which are still unpaid. The second component is the sum of all individual notional earnings components for that payday. The notional earnings component is similar to the current nominal interest component. It is calculated each day as being the outstanding liability multiplied by the GIC rate, and it compounds daily. The third component is the administrative uplift amount. This replaces the current administration fee of $20 per employee per quarter. Instead, the new administrative uplift is designed to encourage employers to take certain steps to remedy their non-compliance. The uplift amount starts at 60% of the outstanding liability plus notional earnings. So what factors can reduce the percentage from this maximum 60%? Well, whether or not you lodge a voluntary disclosure statement has an impact. Now, the voluntary disclosure statement will replace the current mandatory SG charge statement. If you do lodge, the sooner you lodge it, the bigger the discount to the percentage. And if the Commissioner has not initiated an assessment in the past 2 years, you automatically get a 20% discount regardless of whether and when you lodge the statement. In fact, the percentage will be 0 if you have not had a Commissioner-initiated assessment in the past 2 years and you lodge the statement within 30 days of the relevant payday. Now, be aware that the Commissioner does not have the discretion to further adjust the percentage. The fourth and final component is choice loading. This applies where an employer makes a contribution, but it does not comply with the choice of fund requirements in the law. The rate remains at the current 25% of the non-compliant contributions, but the choice loading limit will increase from $500 to $1,200 per notice period. The key takeaway is that if an employer discovers they've underpaid their super, the 2 ways they can reduce SG charge is to, number 1, pay as quickly as possible to minimize the notional earnings amount, which compounds daily, and number 2, lodge a voluntary disclosure statement as soon as possible to reduce the administrative uplift, perhaps even to 0. Now stay tuned for our upcoming comprehensive members guidance to Payday Super, which we'll be releasing shortly.